All right, this is first time recording a lesson on my mobile phone. This is Chef Lieu and Chef Lieu channel. This is the lesson for today. Now, if I'm not sure if you ever heard or this is actually true as of when this is recorded in January 2018 that there is a prominent stock investor come trader in Malaysia that has his home raided by the taxman. The taxman sees some documents and actually he's under some tax investigation. Why? It's because the taxman thinks that his stock investing or trading profit, I'm talking about capital gain here, the taxman thinks that it should be taxable. And you say, what? You say, what? Because as you know, capital gain tax are not taxable in Malaysia. But why is this happening to him? Now stay tuned after the break. All right, guys. Now, this is not fake news, okay? The reason I'm not telling you who, or not naming any organization, is because I don't want to get into trouble, okay, or because this case probably is still under investigation. But this incident was actually written by this owned account, means that this particular gentleman, which is a very prominent stock investor come trader in Malaysia, actually wrote that he's under tax investigation for all his profit capital gain that is made from the stock market in Malaysia. If you follow the stock investing scene in Malaysia, you should have known what are the case, who I'm talking about. But if you don't know, then you're going to find out. But in this video, I'm going to show you why this could happen to you too, especially if you are doing stock investing or trading on a regular basis. Now you know that capital gain tax from stocks and unit trusts and whatnot is normally not taxable in Malaysia. But the thing is, on the tax law, there is a part of the tax law that states that, but you need to look at the 10 badges of trade, whether it fits into any of these criteria or not. If it fits into any of these criteria, then it's likely your profit generated from your normally non-taxable activity becomes taxable. Now, let's look at this, okay? Frequency of trade, okay? The number one, maybe not the number one, but the most frequently thing that hits a lot of people as in terms of frequency of trade. And what it means by that, now imagine you are antique collector, harta karun, not harta karun. It's bad translation, don't know how to say that in Malay. But imagine if you're an antique collector, you go to China or any country, you buy some antique, you come back, then your friends ask you for it, and you actually sell it to them. Now, on this basis, then the profit you make from selling to your friends might not be taxable. But if you always, let's say if you're making good money and you have contacts in China, your friends always ask you to bring them this good stuff, and you do this on a regular basis, buy and sell, buy from China, sell to your friends, then this activity would consider as taxable due to the profit that you are making. It's because the onus is you are actively doing it, okay? And if this is your primary source of income, there's no other income that actually more than what you are earning from the antique buying and selling activity, then that could further justify why the taxman will deem it as a profit making activity, which is in other words a business. And furthermore, if you are not actively employed and you are not actively involved in other form of business activity or retire and all, then there is one more reason for the taxman to say that this is your income or profit generating activity, and it does not matter whether you are a company or whether you're individual, because that will fall under this kind of one of the badges of trade, which is the frequency of trade. Now, this video actually is made is because triggers is because a kind good friend of mine, if you're listening to this, you know who you are, thank you, asked me whether dividends from stocks are actually, if I receive a lot of dividends from my stock holding, for example, REITs are very good dividend generator, very consistent. Is it taxable or not? Now, in my opinion, it's not, because you are not actively, for REIT, for example, real estate investment trust, you are not actively so-called trading it. So likely it's not, even though maybe the amount is huge, your holdings are huge, or your dividend amount is huge. The other thing is for REITs, you know that REIT dividends are subject to 10% withholding tax deducted at source. You want more details on how to invest in REITs, why the consistent so consistent, so good, so just check out link below this lesson video. But back to that, is that dividends, I think no, but capital gain, if you are always like day trading, buying and selling, then it's probably yes. Now the thing is, you might think that, hey, this doesn't make sense, right? You have all the justification to show that this should not be taxable, this is like purely capital gain, right? But the thing is, the taxman does not say like that. It's not think like what you think, because when they come to you and they audit you, all right, it is up to them to define what is taxable and non-taxable. And in most situations, they will have the final say. Now you see that these are the news that come out, at the time of this recording, I think last year, 2017 and whatnot. You know that even public listed company like SP Setia, like Ion Credit and Magnum, these are public listed company. They have internal team of finance accounting that does the accounting. They have international auditors that does their audit. But yet, the taxman still comes to them and say that, hey, you're underpaying this tax because you should be paying for this tax, but you are not. Now, this is not related to like what I'm saying here, but what I'm saying is that the taxman always have the final say. Okay, if I know you can, no issue, you can say what is your justification to say that it's not taxable, but the taxman always have the final say. And even if you are, even you have done all the homework, all the planning, but if something fishy looks to the taxman, from the taxman perspective, then you know that you are going to be hit by a tax penalty. So here at our channel, I'm CF Lieu. I encourage everyone watching this to be a law-abiding taxpayer, a law-abiding citizen. Okay, that's the message. Okay, in case anyone from tax department watching this, this is what I encourage people. I'm fully believe that you should be paying tax that you should be paying. Now, to keep this video short and sweet, I'm not going to name what are the 9 other. I tell you, there's these 10 badges of trade that I'm going to not mention the other 9 because it will make you sleep. Because if you want to know what are the other 9 more criteria to determine if your usually not taxable activities could be considered taxable, just like this video and drop a comment. Okay, wherever you're seeing this, usually in YouTube, just a comment, and I would just dig out my textbook and let you know, because really you don't have to be an accountant for that. Even me as a CFP, independent financial advisor, we know this well, right? Now, so again, subscribe. Find this lesson useful, subscribe, just top up below this video and drop a comment if you want to know these 9 more criteria for your own good. Okay, this is CF Lieu from howtofinancemoney.com. I'll see you in the next lesson.